Ladies and gentlemen, welcome back to the latest episode of our podcast. It's Not Just the Numbers, where Penny Breslin and I, Damien Greathead, we talk all things client accounting and advisory services. We talk all things cloud accounting technology, and share a lot of our insights and experiences along the way. And this episode is a special one, and it's a new feature of our podcast, and we call it After Hours. A little bit like Bill Maher's Overtime, where following the episode, he brings the audience in and they ask the panelist questions. We've done the same thing. We've invited, well, Penny's invited someone that she thinks is going to add a huge amount of value to the conversation, and he's going to share some of his insights. I'll let Penny introduce Stephen a little bit later on, but first and foremost, just recapping on what our last episode looked at. So our last episode really focused on bringing definition and bringing a greater understanding and greater clarity to what this role of advisory is, because there's a lot of definitions that sit there in terms of what can be included under this umbrella. And ultimately, it's up to you to very clearly define what is included in your advisory services. We stress that you don't have to be everything to everyone, but really focus in on what you do best and where you think you can deliver the most value. And you might actually move around the quadrants that we discussed in last episode. So if you missed the last episode, make sure you go back and have a listen to episode 2, where we get into the quadrant that breaks down what is managerial finance, how can we better define client accounting and advisory services. But Penny, I don't want to steal any of your thunder, any of Stephen's thunder. So let me hand over to you. First and foremost, how are you?
I'm okay. How are you doing?
Very well, thank you. You've got the guitar in the background there. You've got the yoga mat in the background there.
All right. That's right. I do not play a 12-string guitar.
What about the yoga mat? Is that yours?
That's mine.
The yoga mat's yours. Okay, wonderful. Yes. Penny, I'm going to hand over to you, and if you can introduce Stephen, how far you go back and the types of things that you work on together, and then we'll crack on with the conversation.
Okay. Well, I'd like to introduce not only a client of mine, but a longtime dear friend, Stephen Ladd. And Stephen and I have known each other for quite a few years. We've been through several businesses together as co-consultants, as client versus vendor, and also a journey to India where I introduced him to some programmers and developers over there years ago. So Stephen was the person that I was referring to when we were discussing the 4 quadrants of what is part of your back office capabilities. What is the job of a CFO, either full-time or partial? And those quadrants in the original book were laid out as the catalyst, the strategist, the operator, and the steward. And then they're kind of subdefined within that first book. And so we got a few questions when we previewed that episode ahead of time with some accountants. And those are the questions that we want to address to Stephen. Stephen, you ready?
Sure am.
Okay, cool. Do you want to say hi to everybody, Stephen?
Hello, everybody from southern New Hampshire, just outside of Boston, where there's snow in the ground and it's almost freezing. It's almost worked its way up to that cold yet so far.
Yeah. Well, we're both in nice climates. So I'm in San Diego and Damien's in Sydney, Australia.
Sydney, Australia. Yeah. And it's summer down here. So Stephen, thank you so much for joining us today. Tell us a little bit of your background and how you got to where you are today, and excited to learn a little bit more about your journey.
So first of all, I'm not an accountant. I'm a recovering engineer. I went to school to design electronic products. Did that for a few years, found myself next in manufacturing and then in sales. And then the company I worked for had a layoff. And I talked to my customers and they said, who are we going to buy from? So I thought I'll start a business and supply you. Eventually built that business up, sold it to Honeywell. And I've gone back and forth between advising companies, like in between jobs, and starting businesses. One of those businesses was a accounting practice with a CPA about 15, 20 years ago. And most recently, I think when COVID hit, I was pivoting from an idea I was working on with my wife, which was around relationships between people, to saying, hey, this COVID thing is going to shut down the country. I'm afraid everyone's going to go broke. I want to work with small businesses and see what we can do to stay alive. So from that, I started working with most recently in that 4-year period, about 40 customers to do that. And with the idea in my mind that I would be a virtual chairman of the board, kind of like a virtual CFO, but more on the strategy side. And it turned out to be very frustrating because not virtually every single client we had some major money problem and they didn't know it. One company, one firm had two parts to it. The woman gave away the part she thought was losing money, but that was actually her moneymaker. And others were struggling to make payroll. And I was trying to find out, do we have enough money to make payroll in 2 days? And that would be a multi-hour job. And so my idea originally of being a part-time chairman of the board was kind of ridiculous in the sense that what we really needed was someone to know if there's any money in the bank today. Can we pay our bills? Do we have cash coming in next week just from counting our receivables? And it was a real challenge. And after COVID and had gone on for a while and people started getting bailout money and whatnot, that the urgency changed, but the problem remained the same as not knowing what was profitable, not being able to get a loan because their books were a mess, not knowing if they had money in the bank or who they owed money to or who owed them money. And so I look back and say I had a highfalutin notion of what my career was going to be, being the strategic coach to CEOs. And instead, I found myself working back to where we were 20 years ago, trying to set up bookkeeping systems with the sort of tools that are available, and technologies and processes that you all talk about all the time.
Yeah, fascinating. And yes, sorry, Penny, you go.
No, go right ahead because I've had this discussion obviously with Stephen often.
It's just a fascinating one. So you're an accountant. What do you call yourself then? Like in terms of when you're out sort of prospecting, or if you're out networking at the barbecue, and in so everything that you said, I sort of understand. But when you're sitting in front of maybe business owners that are technicians that love what they do, but don't necessarily understand the numbers side of things, what do you say that you do? And then I guess my next question is, well, my accountant does that, don't they? So how do you, let me just help me understand how you communicate what you do and the point of difference between you and what they think an accountant or their bookkeeper should be doing.
It's funny to be asked that because I haven't done any sales or marketing in the first 4 years of this business. I was running a mastermind group of business owners just for fun. And a couple of them said, "You're contributing too much. I need to pay you. I need a mentor." And so I decided, okay, you need a mentor? I'm a mentor. And that became the description. An organization hired me at one point and said, "You're an advisor." I said, "Okay, I'm an advisor." But what I found is that what's different about our company, which has a funny looking logo for something that's in the financial business, it looks sort of like a heart. And I believe that what really drives me is a combination of combining love and systems. And when I talk to people, I'll let them know that I understand what it's like to be an entrepreneur because I've done it so many times, that it's not easy. And that, in fact, I'd say you're like most people, you're SOL. You're stressed, you're overwhelmed, and you're lonely.
Yeah.
That's the outcome for everybody in your shoes. I've walked in this walk. I'm a little bit ahead of you, perhaps, but you're doing the same thing. But I'm on the same path. I've been on this path with you, and I can help you get to the next level. And the people that accountants have often sold themselves as experts in their field, that I'm technically better than anybody else type of thing. And I'm not competing with them. In fact, I don't do taxes. I don't do tax planning. I hope to partner with more accountants that are very, very good at that for our clients. And I'm looking for some of our clients now to find a new CPA. But it's not a competitive thing. It's a matter of connecting with people as human beings, because this role of owner of small business, and I'm thinking people that are roughly $1 to $5 million a year in sales, US dollars. It is a hard job. Most of the jobs in the country I don't think our economy would survive without them, but it's rough work, and it's Main Street work. It's not AI. It's not something fancy. It's not high end anything. It's putting fences up around schools. It's currying lab samples from where a patient had a lab test to a place where they can be analyzed. It's basic stuff that runs the country. And making that work, they need to understand. I help them understand that it's okay. I know you've done well, and it's hard. And then there's some things we can do to make it a lot easier.
One of the things.
Fantastic.
Go ahead, Damien.
No. Sorry, Penny, your turn. I was going to throw to you anyway.
Well, okay. Well, one of the things that Stephen and I both related, and he's talked to me about this, is how do you speak to these people that's different than how their accountant speaks to them?
Oh my Lord. First of all, I've learned that the word EBITDA is a bad word in my household. My wife won't let me say it. I learned not to use gross margin anymore. I now call it gross profit. I'm basically say that all of the fancy language that we sling around like investment, oh, it's 5x EBITDA except blah, 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 is right over people's head, and they don't like being talked at like that. So the first thing is to understand that, they are very good at what they do, whatever that might be. Having 20 trucks deliver groceries every day, or whatever it is their job is, whatever their business does, right? We're hopefully very good at what we do, but we can't expect them to be experts in accounting or bookkeeping at all, or finance or anything like that. And most of the people they work with, they tell me, it's like they talk down to me. They're too busy for me during tax season, of course. And when I do get their time, or they deign to call me back in 2 weeks, they seem exasperated with me. I'm not good enough to be their customer. And our approach is different. It's like, hey, you're not a human being. You're good at what you do. I'm pretty good at what I do. I'm going to try to help you with what I can do so you can be a genius at what you do. And that's not common language, apparently, in our industry.
And I'd sort of say if you built your business to $1 million in revenue in terms of the clients that you're working with, they're doing something right. Like something's going well for them.
Amen.
Yeah. Exactly.
And Penny, in the last episode, Penny, you were talking about this Catalyst program that you work with new clients on. So we had a bunch of questions that came in into our LinkedIn that sits around, what do you actually do with your customers, and what does that first 3 months or 6 months look like in working with someone that comes on board with you?
So
Stephen?
we just started a new client on a Catalyst program Monday. So it's very fresh in the mind, right? This particular one just started 3 days ago. They sent us the access to their QuickBooks before we met. They came through a referral, someone else that we had done the same thing for, so they knew kind of what to expect. I looked at their chart of accounts. There were about 250 of them. About 20 of those were current, and the rest hadn't been used in years. The balance sheet didn't balance, et cetera, et cetera. So I went over the books and basically made a spreadsheet out of their accounts and the last time an account was used, and asked them, what's this? What's this? What's this? Tell me about your business. And so we start in this case because they've had a business for a long time, going over their sources of income, where their expenses are and where their assets are and their liabilities. I'm essentially going down the chart of accounts in my mind. Sometimes I break it up by balance sheet and profit and loss statement, but I ask them questions about their business and what do you think, what does this mean? But I should say actually before that, I happen to know something about the business. If I didn't, I'd be asking a lot of questions like, when did you start your business? Why did you do that? What worked well for you? What was disappointing? What are you proud of? And we connect on what the business is really about first. What do they want to get out of it? How long do they want to stay doing this? Do they have a successor? Are they passing it down to a family member or a younger person on their staff? Do they want to sell it for $1 zillion and retire on an island? Like what are they all about? That's the first part. And then the part I started with, which is, let's take a look at some aspects of your business. Tell me, who are your customers? Roughly how big are you? How many people do you have? Things like that. We get to know all those things before we dive into the books.
And whereas a typical bookkeeper or accountant would dive straight into the books, or actually just dive straight into the work, they might not even look at the previous set of books and just get going on things, wouldn't they?
Oh yeah, I think so.
Well, yeah. Yeah. The first thing they usually said is, oh, this customer's a mess.
Yeah, or I can't believe what the old bookkeeper did, or
oh yeah, that's always a good one.
Crap.
Yeah. And it starts off as a diss.
Yeah.
It starts off with these guys must be stupid to have allowed this to happen.
So,
And so Stephen, you've got one. So this is a new customer that's come on board, and so you've gone through what sounds like a very process driven. I won't say standard, but at least a standardized discovery process to really understand what is the motivation of the business owner versus the mechanics of the business, and then move on to the mechanics of the business. So that makes sense to me, and we've done that. We understand what makes the business owner tick, et cetera, et cetera. What about sort of 6 months into the program, or what are those first projects or deliverables that you're focused on in that first 6 months? Because obviously in a consultant, like in a compliance gig, you've got to get compliance done. So the tax man says, or the tax person says, you've got to file a tax return with these particular bodies every time. So the deliverable is the tax return, and it's compliance based, so we have to do it. Whereas in this consulting, in this business advisory role, it's very relationship. But even myself as a consultant in previous years, and Penny is the same. You've got to deliver some value in the first sort of 3-6 months, so that the business owner feels confident that they're getting something for their money. Where are you focusing on for those folks? In that we've done the discovery. Yeah, what's that first way that you demonstrate real value, the deliverables in that first part of the engagement?
understanding. They begin to understand their own business as a result of going through this. When I first started doing this a couple of years ago, I wouldn't say made the mistake, but I was very proud of coming up with a program to take people through a very comprehensive set of all the things we need to do to get them not only good books, but an understanding of the drivers of their business and forecasts and budgets and things like that. What I found the actual value of the program was the customer understanding what they're doing. And we make things real simple. We have this thing called a lemonade stand. They said, if you have a lemonade stand, you're selling lemonades, I don't know, today for say $5 a lemonade. It costs you in round numbers $1 for the lemons and the ice and the sugar and all that stuff. So you have to sell a lot of, that you make $4 a lemonade. And if you have a $400 overhead every day, you've got to sell 100 to break even. And it turns out you can pretty much model almost every business out there as a lemonade stand. Are you going to sell lemonades from a stand? You're going to have more stands. What is your lemonade stand? And asking questions about the basics and explaining why we want to know, and then doing this model to lemonade stand, they tend to understand their own business somewhat organically, not like in a classroom, but it's like, oh, that's why we care about it. Like one of the clients had double counted most of their revenue. They had issued invoices, but when the money came in, they called it a sales receipt. So
sorry, I shouldn't laugh, but I've done that myself, and I've seen it so many times, and particularly I think when Xero and QBO first came out, and the bank feeds were coming in automatically, that was the number one problem, and everyone's revenue doubled.
Well, the key was, the first time we saw this, the key was the company had like $200 in the bank, actually maybe $2,000 in the bank, but they had shown that they did $1 million of business and had $700,000 in profit, which is pretty extraordinary for anybody. And that was part of the problem. Like if you took it down to a much lower number and then got rid of a bunch of stuff, it was more like a $500,000 business and $10 of profit. So yeah, there's that. And partly that is like understanding, like, why would I think maybe there's something off when you have $800,000 of checks in your drawer, as I called it, but it as undeposited funds. But do you really have $800,000 in checks? And absolutely not. I make my husband go to the bank immediately whenever one comes in, that type of thing, right? So it's about that. It's like looking at anomalies and explaining why we care about not paying too much in taxes, and how these things affect either their ability to get a loan or to keep their taxes down helps a lot.
Actually, one thing before sort of the undeposited funds example, you said that inherently these business owners know their business, but they need someone to help uncover what some of those anomalies, what are some of the causes of the anomalies. And I think, Penny, talking to a lot of the accountants and bookkeepers that want to get into this advisory space, there's a reluctance to do it because they think they need to have all the answers. Whereas actually, Stephen, what you're saying, and it makes absolute sense, is they're an expert in their business
Oh,
through
yes.
their eyes. They just need another set of eyes or another, and I think Penny, you said it in the previous episode, ask the question a different way to help uncover that. So I think for listeners, it's you, the accountant, the advisor, you don't have to have the answers, but it's about the questioning process that really gets under the hood of what's actually happening in businesses. And I loved what you said in terms of, oh, that's why that's important. I never realized why even why you were asking that question. How many lemonades do I need to sell just to cover my rent?
Hmm.
Also, I think too that if you come in thinking you have all the answers, you're going to miss, you are going to miss the real problems because you're coming at it from a debits and credits because that's your focus. You're an accountant. That's what you're good at. But you have to understand where the business is at. And it's not just in their debits and credits. It's where are they, you know, emotionally, where are they physically, where are they in relation to all the other businesses in their particular vertical? Where are they in relation to the community that they live in? So if you go in there thinking I have to have all the answers before I go, you actually kind of like cut yourself off. And you
Yeah,
also, I think that's when earlier when you said, Stephen, the client feels like they're being talked down to, or the prospect feels like they're being talked down to. What do you mean you don't understand this? That kind of thing.
Well, in this period of time, I've worked with people ranging from software developers for high-end restaurants to mental health clinics to immigration law firms to people who make cardboard boxes. I mean, it's a wide range and on, right? There's no way that any human being can know a lot about all of those different things, right? So, you have to, I think, is if anybody in the profession likely has, unless they've been really clever and selected a niche, like some you've talked about on your other podcast, they're likely to have a wide range of clients that are doing all sorts of stuff. And it's really hard to be an expert in that. It's hard to even know what's average or typical of that business because it's so new. So I ask them to make it really simple for me. So talk down to me, explain to me in simple terms what it is that makes your business what it is. And usually, with experience after a while, you start saying, the problem with, say, mental health clinics is it takes forever to get paid by the insurance company, and it goes through a lot of cycles. And they deny a lot of claims. So it's hard to provide a low-cost healthcare service in the United States because of the structure that they're working in. Everyone has their difficulty, but they also have their genius that they've figured out a way to get 40 people to provide healthcare, mental health care to folks in underserved communities and be able to keep the lights on while doing it. It's that type of thing. We need to honor the genius of our clients and see if we can find a way to help them maybe get a simpler understanding of their own business, a more fundamental one.
So it's not just the numbers.
It's not just the numbers.
well, now
That was a
relates to
shameless plug. I'm sorry.
Sure it was.
a shameless plug, and we should really wrap the episode there. But actually, I have one, I think probably one last question, because one last question that's come in from listeners to the podcast. And it's not just the numbers, but basically the question is like, I understand that advisory, you need the numbers, but I don't want to do the bookkeeping. I don't want to do that. So if it's not just the numbers are incredibly important. Stephen, how do you get the numbers done? How do you have confidence? Because I'm assuming you're not there doing your debits and credits and whatnot. How are you helping these clients get their books done so that you have confidence in those numbers?
So after they complete the Catalyst program, there's sort of a fork in the road. They can do the numbers themselves, or they can, or we'll do it for them. And when I say we, I mean in conjunction, our company's partnered with Penny's business to do a lot of
Got
that
it.
work. So it's worked out really well. About half of them decide to stay with us, and that goes quite smoothly because we have everything up and running with processes and procedures and technology that we live by. On the other side, we found folks, and the first one we put through this program, it was a husband and wife team, and the wife decided to quit her part-time job and to do the books. And so she took a YouTube class on QuickBooks and promptly undid most of our work over the next 3 months. And so we had to help her again get things back to snuff. There are a lot of folks out there that are in the greater Boston area and some communities, they're talking about doing bookkeeping for $400 a month. And one of our clients said that there's no way I'm going to pay your rate. And we charge a fraction of what it would cost to have a bookkeeper in house. I'm going to get my own person really cheap like that. And, I don't know how they do that. And I don't know how we've seen so many people come from that place of, oh, I found a cheaper bookkeeper. That's sort of like finding the cheapest brain surgeon, in my opinion. So there are a lot of good people out there, but there's others that are cheap. And it depends on whether the CEO or the owner of the company is looking at this as a cost or as an investment. And if they look at it as a investment, I think they make the right decision, but that's our perspective. We tell them during our program that as the owner of a business, you have way too much to do. You don't want to be in the weeds on this stuff. And not only is it bookkeeping, but many other things. Oh, hello there. Who's joining us?
Oh no.
This is Wyatt.
Hi, Wyatt.
This is Wyatt.
Hi, Wyatt.
He's
Oh my God.
he's 15 months old. And
Nice to meet you, Wyatt.
That's Wyatt. And this is 3-year-old Gus.
Hey,
So
guys,
what's your
I've
number,
been
Gus?
seeing you for a long time. My
What's your
goodness
number,
gracious.
Righto. Off you go. I'm sorry about that, Stephen.
No, it was wonderful.
Don't be sorry. I'm interrupted every day by my 3-year-old granddaughter who comes up to have me make a printout of a princess picture on my laser printer, so we can draw at it. We actually think that the purpose of work is to support our families and are very pro-family, and believe that most of the customers we have are family-owned businesses. So it just kind of makes sense that family comes first. We're doing this for them, not because we're trying to just build a company for no particular reason.
And so, okay, so you were saying about 50% of the people that go through the Catalyst program so far, 50% of them take you up on your organization in conjunction with Penny taking care of the bookkeeping. Other 50% say, look, we'll do it ourselves. We'll find something cheaper. Do you still continue to work with them, or what happens to that group of people, or do they graduate out of your program and off they go? And what happens to that 50%?
So they graduate, off they go, and the first couple I saw weren't so successful. And so it caused me to do a lot of thinking. It's not just, honestly, I took your book and a whole bunch of other notes and developed the first version of the program. So it was to get them in and then have them operating smoothly. And I basically used your work to look on the smooth operating side, and also a whole bunch of checklists that Penny has provided. But what is needed is I was missing is I needed to teach the owner why they cared about certain things. Like if you get a bank reconciliation and your bookkeeper says, here it is, it's right. Look, the numbers match. Did you scroll down a little bit and see about your uncleared deposits and wonder why you have $400,000 deposits from a year ago that haven't cleared yet, but they're still on your book? It's showing them the gotchas that a few, I mean, it's not clear we could do hundreds, but some of the key things to look for when managing someone who's doing the books for you, whether they choose to use us or someone else. I think that's the ethical position, because I don't think it's ethical to set somebody up and basically do it for them, but not teach them how to do it themselves or have it done for themselves. So it's becoming more and more instructional and understanding, and less about just doing the work.
And then if I could sort of wrap this conversation up and go back to the quadrants that are in the book that Penny sort of built that sit around Catalyst, which is what we've been talking about today. It feels like then you've almost empowered the business owner, particularly specifically the ones that work with you on an ongoing basis, and you get get their bookkeeping done, your firm, or your business. So they go in then to the operator role in many respects. You train them to be the operator, which it sounds like you're then going to sort of move over to this strategist side to sort of say, you know what, now that we've got the business organized and systemized and process driven in for the back office, the business owner has much more control and understanding and of what makes their business tick. Now let's actually think about what are the growth drivers, and let's actually sit around and do some strategy stuff to think about growth, succession planning, tax, maybe not tax planning, but growth and succession planning. So it feels like you've empowered the business owner to be the operator. You've got the catalyst done to get them in shape, and now you're sort of navigating over to this strategist role to sort of help what's the next stage of the business. Would that be fair? Would that be a fair summation?
Absolutely. That's what I wanted to do when I started this, but I just couldn't get there. I did all that other work, right? This is the fun part.
Yeah.
Where do you want to be when you grow up, Mr. and Mrs. Business Owner, right? What is it you're trying to accomplish here? How can we do that? What makes you special? What is it? Why do people buy from you? And then who are those good customers you want? And we're not using ideal customer archetype or things like that, but just normal human being language. Like, how is it? Where do you want to take this thing? And what about this? And what about that? And what might be most successful for you and the people you serve as they're your customers. That's the fun part. But without this foundation, you really can't have that conversation.
Yeah, brilliant. Penny, any final thoughts, comments, or questions?
I think it would be very interesting for people also to know the size of Stephen's company. Stephen, how many employees do you have?
Counting myself too.
And how long do you typically stay in the catalyst stage? And how many of them are in the catalyst stage at the same time?
So the most we've had so far is 2 at a time. This catalyst stage is designed to be 10 weeks. It's often taken 12 or 13. In one case, it took about 20. That's for a client that had 28 different accounts, of which money was shuffling back and forth at a furious rate.
And of the clients that have decided to continue to do allow you to do the bookkeeping, what was their initial reaction when you started going in and showing them stuff compared to the way they feel now? Well, did you ever get any pushback? Like the client just won't?
No, the worst clients are the ones that don't respond at all. And we have a portal system for asking, technical questions like, what's this expense for? With automatic reminders set up twice a week by email, and some will go a month between emails, text messages, and phone calls not answering. That's a very small minority. My favorite client of late said that when she started and heard about the program, she said, this is just another BS program that's going to be people talking down on me. It's going to be a waste of my time, but I'm going to try it anyway because maybe it'll help me get a loan. And it turns out, she says, now it's opened my eyes. I can see how my business can succeed. And oh, by the way, she got a almost $250,000 loan as a result of having books that for the first time the banker could actually understand.
So I'd say you're being rather successful, because you did ask me this morning how many catalyst programs, because we're part of also the cleanup on these catalysts.
Oh, yeah.
People, how many can we take on? So yeah, so it's obviously been somewhat of a success, and now you're looking to connect with a CPA or a tax accountant who can help with that strategic tax planning that
Absolutely.
The clients are now on. Yeah, cool.
There's a shortage of tax preparers out there, and so we've tried to bring our clients to certain ones that we've heard good things about or had good experiences with through other clients, and they're being no bid like crazy because they don't have capacity. So I'm looking for, I'd really love to find a CPA who enjoys tax planning. Of course, they like doing returns and doing the best job they can there. I had one that was wonderful like that, and he passed away a number of years ago, and I'm looking for someone who is Mark read tax court.
He was awesome.
Fun. He would read this stuff. It's like reading the stock pages, just the numbers to see the patterns. He loved that stuff. He was a wonderful human being. And I'd like someone who enjoys the tax stuff and doesn't like the bookkeeping. We could, partner up a little bit. That would be a lot of fun.
I think we can try to find somebody. I think I have somebody. I have 2 people in mind. Now that I know you want this.
Yeah.
Okay.
Okay.
Got it.
Stephen, this has been just a really valuable and actually heartwarming conversation, because even we're through Zoom and whatnot, but I can feel your passion for small business. I can feel your passion for family business owners and helping them succeed. So thank you so much for sharing your experiences and sharing the ups and downs and the bumps along the way. And absolutely, I know our listeners will get a huge amount out of you, and will give them confidence to take this step, because I think there is a real need for it, particularly in those businesses that drive the heart of the American economy, that drive the heart of the Australian economy. And I really appreciated the way that you sort of articulated that earlier on. So, Stephen, thank you so much for this. This has been absolutely wonderful. I hope you thaw out up there in New Hampshire. I'm going to head off to the beach now, but for a swim. And I'm not sure what Penny's going to do over there in San Diego. But
I'm going to go down to the harbor and have a nice glass of wine with Rick, because it's nice and beautiful out here.
Okay. So, Stephen, with your permission, we'll share your LinkedIn details in the show notes, so people can look you up and connect with you as well. And hopefully we'll be able to make a couple of introductions, whether they be small business clients or tax accountants that love tax planning, because we know a few. So yes. Without further ado, ladies and gentlemen, let's close this episode. Say thank you very much, Stephen. Really appreciate your insights and coming on the show. Penny, always a pleasure. And folks, if you've enjoyed listening or watching this episode, jump onto your review sites and share it, like it, and leave us a comment. And then if you do have any questions, reach out to Penny or myself via LinkedIn. We're easy to find on LinkedIn, Penny Breslin or Damien Greathead, and we'll get your questions answered either by ourselves or by one of our guests in our after hours session. So, ladies and gentlemen, it's just not the numbers, and we look forward to our next episode. See you, Penny.
Thanks.
See you, Stephen.
Bye-bye. Bye-bye, Stephen.
Bye-bye.